Hello, and welcome back to the Foreclosure Deals Coach podcast. I'm your host, Donnie Corum, the Foreclosure Deals Coach. And on this episode, we're going to be talking about the mindset of the house flipper, specifically how to get the right mindset tips to be stable in this really volatile market. Stay tuned. This is going to be a great show. Hello, and welcome back to the Foreclosure Deals Coach podcast, the show where we teach the mindset, tactics, and tips to become a successful foreclosure investor. Thanks for tuning in each and every single week to the show. We're going to hop right in. Today, we're going to talk about the day trader mindset in foreclosure flipping. And, I try to have some fun with the graphics, but you can see here today, I had a guy who's looking at the market as if you were a day trader in the stock market. But you can see there, he's looking at houses, not stock. And that's really what I try to impart on my customers. How do you develop the mindset of a day trader? And, I've worked with a lot of traders over the years, being in the finance space, talking with people who are used to higher risk investments and even foreclosure investing, commodities traders, futures traders, people who trade Bitcoin and et cetera. And there's a lot of similarities, to be honest, on how you approach the real estate market as composed to day trading houses. Now, so differences right out of the gate are it's not quite as fast, right? When you are day trading a stock, you can be in and out of that stock in the exact same day. A lot of times you're buying at the morning, selling at the afternoon. Some of my day trader buddies are really only in stock based on the momentum of the stock for a few minutes. They'll buy in right at the morning at opening bell, if you will, and they're selling immediately when the stock goes to where it needs to hit. They're on with their day, right? So it's definitely a shorter term. But again, a lot of the same mindset stuff that you need to be a successful day trader need to be applied to flipping houses in this area, especially in the market that we're in right now. So we're going to jump into a couple of tips on far as what you need for the mindset. But before doing so, just a quick market update. It's a weird time out there, right? And the reason I wanted to go over mindset is because this is an advisory service. Well, what we're offering is the ability to help normal investors to find, figure, fund, fix, and flip a foreclosure deal. The idea is you're paying for the analysis, the years of training that my team has, and the process of locating deals in a marketplace where there are a lot of deals available, but you definitely want to find the best deals available out there based on price, location, features of the home, etc. So anybody can get you into a deal. The idea behind the foreclosure profit system is to get you into the right deal. And a lot of the guru systems out there, the education systems, are really just teaching the theory, whereas the foreclosure profit system is about actually doing deals where you can make a target profit of $25,000. With the market being as slow as it is right now, almost goes without saying that a lot of clients are a little more frustrated with the real estate market. And honestly, if you're doing anything related to real estate investing right now, I think you're going to find that the general consensus is frustration. Now, is there a reason not to do it? Absolutely not. Real estate wealth is one of the best ways to create wealth with all the markets that are out there. But you do have to be able to navigate the market regardless of what direction it's traveling in order to make the best profit on this. So we're going to hop in and discuss some of the mindset stuff that's just really required to be a successful trader of the market. And it really kind of comes down to the combination of the discipline, the emotional control, and the focus on risk management, because if you don't have solid discipline, if you lack the emotional control and you can't handle the risk management, what you're going to find is that you get yourself into situations that are not ideal. You're going to, getting yourself, into deals that don't make sense. And then you can even be in a deal where you don't want to be in that deal. And then how you get your way out of it, it all comes down to discipline. So the first keyword we're going to talk about here is discipline. And let's hop into that. All right, I'm going to pop it up there so you can see it. Here we go. All right. So On the discipline side, right? How does one get the discipline required to be a good real estate investor? Well, you really have to treat this like a business. It's so much the fact that there's a well-defined strategy before you get started. You know how you're going to find the house, you know the analysis process, and et cetera. Long before you get in the deal, you have to create a discipline. Now, that's also very true of investing in stock, right? You want to know your buy points and your sell points. And you kind of want to know those at the same time, right? So you're making a decision. And as you've heard the saying before, but it begets saying again, you make your money in this business when you buy. You realize it when you sell the property. So that discipline has a couple of features in there that you have to make that work. The first of many is the business-like approach to it. You want to take a business-like approach because you're looking to create a business here. And a lot of people come to real estate investing, I have found, looking at that get rich quick, I'm going to make a whole bunch of money on this deal and all of my deals. And they don't go in with that long-term strategy that's really required to be successful in this market. So I advise people to take a business-like approach. If you were starting a franchise, which you very much are with the foreclosure profit system, what key points would you want in place to ensure that your business was going to be successful? Well, this is a 5-part strategy: find, figure, fund, fix, and flip. So the first strategy on the business-like approach is making sure you've got a way to find deals. The good news is we provide the deal flow for our clients. So you don't have a ton of work to do there, but that's the business-like approach that a lot of people who want to flip houses don't take. Like, well, I'm going to trip, fall, and land on my first deal, and then hopefully I'll trip, fall, and land on my next deal, etc. We eliminate all those gaps of the foreclosure profit system because this is a business. The analysis side is very much the same. You could figure out analysis or train for years on real estate analysis, and you've got people who are stock traders, right, who are very good at the analysis, right? They can look at the ups and downs of the market, etc. And then you have other traders who rely on other people's advice to provide that analysis. And that's what we're doing here with the foreclosure profit system. We're giving you that business-like approach because everything you do, you're going to have to be repeating, and that system is going to get better as you get going, right? So you really want to focus on the business-like approach to this, not the get-rich-quick approach that a lot of people come to real estate investing with. The next thing you want to look at is the emotional control. Now, this is a big one, especially when the market is like it is right now. It's easy to say that you have emotional control until you are actually in a deal, right? And then people come to me, we start a deal and they're okay, but when the deal starts to take a little bit longer to sell, which is what we're seeing across the board, and we're very high on disclosure on that, explaining this is our estimated days on market. But as the market has started to slow down, we are increasing that days on market so we can provide accurate analysis. But the key there is having the emotional control to weather those storms as they happen. Obviously, we would all love to see everything go fluidly. You buy the house, exactly right, and which we can normally control. You get it fixed to exactly where you want it. And no snafus in there. We control a lot of that, but when you're doing construction, there's always a certain degree of a variable in that. So, and then finally you hit the market and it sells in a week, right? That would be perfect. When we saw that a lot in the 2020 and 21 market. But the reason the real estate investing world is actually, potentially more lucrative now is because the days on market is taking longer. There's more difficulty in getting the flips done. So what we're seeing is the gross spread on properties has increased substantially in the last year or so. We can buy houses for much cheaper, especially stuff that's coming off of foreclosure right now. The pricing is very good because there's a lot of inventory on the market and it's a great time to buy. This is obviously not always going to be the case, but that's where we find ourselves right now. If you don't have the emotional control, though, to manage that expectation and know that because we're getting it cheaper, it's probably also going to take longer to sell, that's where you find a gap in the process here. And you really have to maintain your emotional control to make that work. Let's move on to our next point, which is risk management. And risk management is the entire process of dealing with all the potential unknowns of doing a real estate investment. Again, you make your money when you buy. So we mitigate some of the risk at buying it correctly, but then you have to factor in risk management and the fact that we put a contingency on our property. So if we're claiming that we're going to have a $50,000 remodel, we budget for 10% more than that to allow for some risk management on the things that we can't see. Right? That analysis process really covers a lot of the risk management. But then while you're in the remodel, risk management includes security, right? We don't want the house to get broken into, vandalized. We provide cameras and security systems on our flips so we can monitor the process of getting the remodel done without the client being in place, and allowing our team to manage a lot of the process remotely so things have less likelihood of going wrong because we can see what's going on. This is an imperfect world, right? And the reason it's profitable because of that imperfection, but a good risk management system, both in the acquisition phase and the construction phase, and then again in the sales phase. Who do we allow access to the property to show the home? What agents are the agents with the buyer when they see it? There are things we can do to mitigate the risk, because we don't just want to go out there blindly and just put the asset out there. We've got to manage the risk. That's a big part of the mindset you have to adopt when you're flipping foreclosures. And when you're doing day trading stock, again, just to create that parallel, you're buying the right stock based on what the market's doing at the time, much like we're doing, right? There's a discipline to that, not falling in love with the property, taking a business-like approach, avoiding the emotional control, and then the risk management aspect all go hand in hand with your day trading stock or houses. People differentiate this quite a bit, right? And there's an explanation, expectation, that there's going to be a difference in how this feels. But I explained to them when we're doing our initial consult that the similarities were more than the differences, for sure. We have a lot of things that go hand in hand in parallel with when you are day trading stock or when you are day trading real estate investments. You have to be able to balance those two appropriately and really know what you're getting into, because if you don't do that, you're going to find yourself in a jam along the way, because emotional control is so important. And the final one is the patience and discipline. And I want to bring that up because we started out with discipline, but I want to reiterate that discipline, because one of my best, one of my good buddies who is a day trader in this market explained that if you don't develop the patience, you're going to lose a lot of money, because you have to have the patience to know where your entry points are to buy. And a lot of people come to me in the housing market and they want to buy a house immediately, right? And I say that, some of it, there's always a deal, but when we get into a deal is absolutely critical, and having the patience to enter the market when it's appropriate is absolutely critical. One could make the argument that it's not a good time to buy a house in certain markets because we're heading into a slower season. I use the best example as Colorado right now, is not to say that we're not doing any deals in Colorado, just that getting into a deal in the Colorado market when we're also heading into winter and the slowdown that could come with that, plus the interest rates are still very high, maybe a little bit questionable. Now the question becomes, why would I invest in the foreclosure profit system if now is not a good time to buy? Well, the answer there is it's always a good time to get your systems and structure in place. The idea is we want to prepare for a market where things are more conducive, and we're setting up another market in Phoenix, where I'm currently located, where you can buy houses right now, because we're heading into the fall system, fall part of the year, where things actually pick up a little bit as the people come back into Phoenix, because it's dreadfully hot during the summer. A lot of people don't want to be in this market during the summer months. So this is a really good time to be buying now as we head into fall and winter, because things are going to pick up. The key there is got to have the patience. Obviously everybody who signs up for the program is super eager to do their first deal. We are compensated to find deals for the clients. So there's a motivation on the part of my team to locate those deals very quickly, but you got to have the patience and discipline to know when the right time to enter the market is. And if it isn't right now, then simply don't do it right now. Waiting another 30 days may put you in an entirely different setting down the road that may keep you out of a jam. Instead of entering into the market at the wrong time, you enter into the right time, and the deal's obviously going to go a lot better if you can pick the right timing there. All right, let's move on here. Adaptability is our next one. And adaptability is a big one, because this is one market or one area where things are, the only constant is absolutely change, right? You have to be able to adapt to what's happening in the real world market and not be very rigid. Very flexible is important. Having a set goal, which we did in the planning phase, the analysis phase, is critical, and setting that up. But then you have to be able to adapt a little bit to whatever market dynamics are happening. And one great example of that is the interior design piece. Whereas we had a time where everybody was doing the agreeable gray and white trim, and that's where the market was. And we really stayed in that area. Well, things have changed a little bit, and some flippers I have seen have not adapted to the current color palette, which is more of a tannish gray, if you will. It's lightened up a little bit. We're still using a lot of white trim, but you also see more dark trim on properties. The key is monitoring the market to know where it is in real time. And, unfortunately, it doesn't stay in one place. So you want to relay it to the interior designers that we have on our team are always watching what's happening in the market in real time, what's selling right now, so we can adapt our color palettes and pricing strategy to what's happening in real time. The unfortunate part about that adaptability is right now, I'm not going to kid you, when we bought properties 4 months ago or so, we were dealing with the comps that were 3 months prior to that to define our pricing. And, the market has faded a little bit across the board with things puttering out of speed, with the high interest rates kind of tiring buyers out. And the best way I can describe how I think buyers feel right now is exhausted, right? There's so much to look at because there's so much inventory on the market. Then you couple that with high interest rates. You got to really, factor that in. And I think a lot of buyers are going, screw it, I'm just going to rent for a little bit longer. If they got to move right now, I think you got a lot of buyers who are afraid to enter the market at the moment. And so we have to adapt to the times that we're in right now. This is meaning lower margins, being honest with you, on what's taking place in the marketplace. But a professional investor is okay with lower margins. They're okay with the fact that we're building a system that's a long-term money machine. It's not a short-term gain model here, guys. Although you make gains in the short term, you flip a house, you make $25,000. That's a great feeling. That's a nice economic impact. The idea behind the foreclosure profit system, it's an annual system where you're getting consulting on an annual basis to do ongoing deals, not one deal, but an onslaught of deals over a long period of time. The current deals we're buying, we got to buy them really well. We got to wait for them to sell for a while. A lot of my clients are going to a longer term strategy where they're holding onto the property instead of selling at this market. And quite honestly, that has been the case for the last couple of years, not the intent. But I would say 24, a lot of clients didn't end up selling. They ended up having to list the property for rent because it didn't sell for what we wanted. We adapted our numbers even lower in 2025. And then there was a bit of spike when Trump took over. We thought prices were going to come back up, and our speculation pointed to an increase in market values that, based on a lot of stuff happening politically, just didn't happen, right? So we find ourselves in a different market than we were hoping to be in. So that brings us to the next step: continuous learning. Listen, you do not want to learn everything you can on your first deal. Let me rephrase that. You don't want your entire learning to be your first deal, right? Learn everything you can, but you don't want to base your entire process on that first deal. Most people have a negative experience on their first deal. The idea is that the system prevents those experiences from being less than profitable. We don't want to lose money doing this, but the idea is that you're learning continually from both your positive and your negative experiences. Being 400 deals in now, right? That I've learned a lot from each and every single deal. And now I'm learning from my clients' deals. So I am just a wealth of knowledge, and I'm passing on that continuous learning to my clients in real time. And that's the benefit you get from being part of the system, is you're not just learning from your deals, you're learning from all of the deals. But any good day trader would tell you that you've got to stay trained on getting better and continue to train and get more information and go to classes and courses. And I have spent at least $100,000, I would say, on education in the real estate space, going to conferences, mentorship programs, webinars, all of those things over a 20-year career, because you have to be constantly learning about this if you're going to be effective. And this is a mindset thing you got to adopt, is being effective requires that you're continuously learning. Let's move on. The next one is realistic expectations. Man, this is a good one because a lot of people come in with unrealistic expectations of how easy this process is going to be to make a bunch of money in flipping. Let me be frank with you. There's nothing easy or fun about flipping houses. And I know you watch these things on TV and you see all these shows and you see Chip and Joanna Gaines and they make it look like this is an easy process that's tons of fun. It is not that. What it is an investment vehicle, right? And when you're day trading, you got to take the fun out of it because that's an emotion, right? You want to remove that from it. And in this model, you really have to set realistic expectations as to how long it's going to sell. And obviously we do everything via data. So it's data-driven approach. This is what the days on market is for this particular area. This is the price per square foot we're expecting to get. So we are speculating on the future of the market. And, it's speculation. I'm not saying that, it lets us off the hook when we don't hit the number, but I can say in the last 6 months or so, nobody really expected what direction the market has traveled. We really expected things were going to go to the positive, and for the past 6 months, they have not. So now we're setting a new round of realistic expectations that's not as positive as it was 6 months ago, and we're going to continue to be more and more realistic based on what's happening, and that's what's going to net a long-term result on this, okay? And the last one I want to bring up is focusing on the process, not the result. And this is the toughest thing for most people because everybody wants to make money on real estate investing, just like you want to make money when you're trading stock. Your goal is definitely not to lose money on things, but when you were doing day trading of housing, when the market shifts as it has, it's difficult for me as the lead advisor because it's a lot of apology. People have their investment capital and they're putting it in with the intention of making money right out of the gate. And certainly I want them to make money, but it doesn't always happen that way. And I will say that any investment program that guarantees results and says we make money on every single trade is definitely a scam, okay? The only realistic investment systems are the ones that can balance your expectations. Again, remember that emotional control, right? And balance your emotions and expectations by having realistic expectations as to how the market is operating right now. One way you can mitigate some of your risk is to not use hard money because it's very expensive. So some of my clients now are really looking at people who can pay cash for a house. That's difficult for most people to have $200,000-$300,000 available, but you can still make a lot of money in this market. Actually, I'll argue more money in this market because the days on market are longer. If you can pay cash, your return on investment is going to be that much more. Just obviously, you got to be in a different financial position where you can move that kind of money. But it is a little bit more predictable than the stock market. It is a little bit more, I'm going to say that it's more profitable. And most people who have wealth have a balance in their financial portfolio between the stock market trading and the housing market. It varies based on the type of person we're talking to, but pretty much every millionaire you're going to meet has at least some of their portfolio in real estate, which they live in, and then real estate, which they're speculating on, which is, rental property, commercial property, things like that. The expectation is it's going to go up in value for the long haul. The key is you got to focus on the process that you're building to flip properties, not the actual result. The result needs to be profitable, but if you have an unprofitable process, you got to look at what went wrong and then adjust your strategy so it doesn't go wrong again. And that's really easy to say and much harder to do when the market is like this and people are having to adjust their exit strategy because the market has shifted a little bit based on, I'll be frank and say the speculation on the market that every one of my clients and I share based on data-driven stuff. We're not making this up as we go, right? We're looking at the trend analysis on a new president coming into office, what's the interest rates they're doing right now, what we believe the future of the market is going to be, right? But even with all the data in the world, sometimes the market doesn't operate as expected, and we're definitely seeing a lot of that today where we're not getting the operating as expected today. So, with that, guys, the key is the right time to get started in real estate investing is right now. Right? You can build a process that when the market is even more conducive to deals than it is right now, when there are more foreclosures coming out there, you've already got your construction system in place, you've got your funding system in place, you've got solid analysis tools available to you all through the system, and you've got an acquisition team able to provide deals to you in real time. No matter what the market is doing, it's a great time to start investing in your systems, and the foreclosure profit system allows you to get deals right now that can provide you a moderate profit, but more importantly, prepare you for deals in a future market where things are going to be gangbusters, and you don't want to be setting up your systems when things are already running at full speed. Rather, you want to be getting those systems dialed in and doing a couple deals here and there. So when you're ready and the market is ready for you to do 20, 30 deals in a year, your systems are already in place to do that. And we can help you to get that set up with the Foreclosure Profit System. So let's wrap up with that, guys. Head on to foreclosureprofitsystem.com now. Set up a call with me and listen, no pressure. I would just like to talk to you about your investment journey and see if the Foreclosure Profit System is the right fit for you to park some capital in this area, make some money on speculating on real estate. But if you're going to be a day trader, you got to get the right mindset, and we help you through that, as well as helping you get into deals that can make you an average target profit of $25,000. With that, guys, if there are no questions today, let's just hop in there, see if there's any questions. Nope, no questions today. Hey, I want to thank you guys so much for tuning into the Foreclosure Deals Coach Show each and every single week here. I am your host, Donnie Corum. Thank you for tuning in. And remember, now and always, don't buy a house, buy a deal.